Imagine having a direct line, like right into the latest strategic moves, the financial plays of a major automotive player, all distilled down to what really matters. Well, that's exactly what we're doing today.
Right.
We're taking a deep dive into Uno Minda Ltd. They're a real powerhouse in the auto components sector.
Absolutely key player.
And we're going to unpack their Q1 FY26 performance.
Yeah, there's a lot to get into there.
So, where are we getting our info? Well, it's straight from the horse's mouth, essentially. We've got their board meeting outcomes, the unaudited financials for Q1.
Yeah.
That's the quarter ended, June 30, 2025.
Yep, got those.
Investor presentations, press releases, even, snippets from their latest earnings call.
A good stack of material.
Exactly. And our mission for you listening is really to cut through all the noise.
Yeah, filter it down.
Pull out the important stuff,
Yeah.
connect the dots for you so you understand not just what happened, but like why it matters in the bigger auto industry picture.
Makes sense. Let's do it.
Okay, so let's unpack this. Uno Minda's Q1 FY26 results are out. And the headlines, well, they definitely grab your attention, don't they?
They certainly do.
What's the top line story here?
Okay, so the consolidated revenue from operations for the quarter, it hit Rs 4,489 crore.
Wow.
Which is a really strong 18% jump year on year.
18%, that's big.
It is. Now, what's kind of interesting here is that this number, it actually includes about Rs 69 crore in prior period incentive income, a bit of a one-off.
Ah, okay. So a bit of noise there.
A little bit. But even if we, normalize for that, take it out, the core revenue is still a very healthy Rs 4,420 crore,
Right.
which is still a robust 16% year-on-year increase.
Okay, so 16% underlying growth. That's still very solid. The core business is really expanding then.
Definitely. It shows strong market acceptance, good operational efficiency too.
And what does that translate to, the bottom line? Profitability.
Profitability also saw some really strong gains. The consolidated PET, that's profit after tax, attributable to Uno Minda shareholders.
Right, was Rs 291 crore. That's an impressive 46% year-on-year growth. 46%.
Wow. Okay. So profits growing much faster than revenue.
Exactly. And again, even on that normalized basis, if we strip out that incentive income,
Yeah.
the PAT was Rs 239 crore. Still a very healthy 21% increase from the Rs 199 crore they did in Q1 last year.
21% normalized profit growth. That's still really strong.
It is. It shows the core earnings power is definitely there.
And what about their operational efficiency? I mean, you hear about cost pressures everywhere. How did they handle that? The EBITDA margins.
That's a great point. Despite, the usual annual cost escalations, increased manpower costs, things like that, their normalized EBITDA, earnings before interest, taxes, depreciation, amortization, came in at Rs 474 crore.
Okay.
And crucially, they maintained a stable margin of 10.7%.
Holding the line at 10.7% despite cost headwinds, that is impressive resilience. Shows good discipline.
Absolutely. Maintaining margins in this kind of environment is definitely noteworthy. Okay, so strong top line, even stronger bottom line, holding margins. What other sort of key financial metrics jumped out at you this quarter? Anything on the balance sheet side?
Yeah, looking beyond the P&L, the standalone financials, for instance, show a net profit of Rs 273.86 crore, basic EPS at Rs 4.77.
Okay.
And importantly, their balance sheet looks healthy. The debt-equity ratio is quite comfortable at 0.4.
0.4, that's pretty conservative. Lots of room.
Exactly, not over-leveraged. And their net worth stands strong at over Rs 5,100 crore.
Solid foundation.
Definitely. Also, just a couple of other points from the quarter. They allotted over 358,000 equity shares to ESOP holders.
Right, employee stock options.
Yeah.
Good for retention.
Yeah. And they successfully issued and then redeemed Rs 200 crore in commercial papers. Shows good short-term liquidity management.
Managing their working capital well.
Seems so. And looking forward slightly, the board recommended a final dividend of Rs 1.50 per share for the last financial year. That's pending shareholder approval, of course.
Okay, so rewarding shareholders too. Sounds like a company in pretty robust financial health.
I'd say so, yes. The numbers paint a strong picture.
But, no company exists in a bubble, right?
Right.
To really get a handle on their performance, we need to zoom out a bit. How does Uno Minda's quarter fit into the broader economic scene, both globally and, maybe more importantly, for India's auto industry?
Right. Context is key globally. Well, the IMF is projecting about 3% GDP growth for 2025.
Okay, modest.
Yeah, modest, and it's facing increasing headwinds, trade tensions, geopolitical instability.
Like the U.S. tariffs.
Exactly, like the U.S. tariffs on imports from places like China, Canada, Mexico, those kinds of things are estimated to, potentially reduce U.S. wages longer term. It creates friction, uncertainty.
Right, definitely a complex global picture. But you often hear India described as a bright spot. Is that holding true?
It really seems to be. India is anchoring its macro resilience, as they say. Our economic growth is projected at a really robust 6.4% for both 2025 and 2026.
6.4%. That's standout growth globally.
Absolutely. And that robust growth, you see it translating somewhat into the automotive industry, specifically for this Q1 FY26 period.
Okay, so how did the Indian auto industry actually perform overall in the quarter?
Well, the industry recorded an overall 2% year-on-year volume growth. Total production hit around 8 million units.
8 million vehicles.
Yeah.
Huge numbers, but only 2% growth.
Yeah, and what's particularly interesting, maybe even surprising, is that this growth was largely propped up by record export volumes. Domestic consumption actually saw a slight decline overall.
Okay, that is a crucial distinction. So exports are really carrying the weight right now. Could you break that down a bit by vehicle type, PVs, two-wheelers?
Sure, look at the segments.
Yeah.
For passenger vehicles, PVs production grew 3% year-on-year, hit 1.24 million units.
Okay.
The utility vehicle segment, SUVs and the like, was particularly strong there. But again, look at exports. PV exports grew by a significant 13%.
13% growth in PD exports. Strong. What about two-wheelers? That's a huge market in India.
Two-wheelers, well, domestically it was marginal growth, just 1% year-on-year.
It's flat, basically.
Pretty much. But the bright spot, the really bright spot, was two-wheeler exports. They surged, up 80%.
80%, wow. To 1.1 million units exported.
Exactly. Massive jump. Shows huge global demand for Indian two-wheelers.
Incredible. Okay, what about three-wheelers and EVs?
Three-wheelers delivered robust growth, 10.4%, mostly driven by demand for cargo carriers, which points to, logistics activities.
Makes sense. E-commerce, deliveries, and all that.
Probably. And finally, the EV segment. It just keeps climbing.
Yeah.
Electric two-wheeler registrations were around 2.98 lakh units, so nearly 300,000.
Still growing strong.
And electric three-wheelers grew a remarkable 27% to about 1.9 lakh units, 190,000. So yeah, the EV momentum is definitely there.
Okay, those export numbers, especially for two-wheelers, they really do pop out. So just maybe Indian manufacturing is becoming more globally competitive?
It certainly points that way. And trade deals can help too. The India-UK Free Trade Agreement, for instance, that could offer significant opportunities. Near duty-free access for exports to the UK.
That could be a big boost.
Potentially, yeah. And regarding those U.S. trade issues we mentioned, even though the U.S. put that 25% tariff on some Indian exports, Uno Minda actually stated that U.S. exports are less than 2% of their total revenue.
Oh, okay. So limited direct impact for them.
Seems so. And interestingly, they actually said they're seeing growing demand for their two-wheeler products in the U.S. market, despite the tariffs.
So they're finding ways to navigate it, or the demand is just that strong.
That's like it shows some resilience.
Okay, so that sets the stage nicely. Strong financials, navigating a mixed global scene, but a resilient India, especially on the export front. Now, let's zoom back in on Uno Minda itself. This is where it gets really interesting, right? Beyond the headline numbers, they've been making some pretty big strategic moves, operational shifts this quarter.
Absolutely. These are the things that shape the future.
Let's dig into those. Maybe start with leadership. I saw some changes there.
Yeah, they've definitely been fortifying their leadership bench. The board appointed Mr. Ranveer Singh Khalsi as an additional director. He's non-executive independent.
Khalsi. From Rudy Suzuki, right? Decades of experience.
Over 4 decades, yeah. He was key in initiatives like Maruti Insurance, True Value, and notably creating the Nexay channel.
Nexay, right. Big deal from Rudy. So bringing in that kind of market and customer experience expertise.
Seems like a clear signal in that direction.
Yeah.
And they also recommended reappointing Mrs. Rashmi Hemant Erdware for a second term as an independent director.
She's the former director of ARAI, the Automotive Research Association of India.
That's her. Huge expertise in vehicular safety, e-mobility regulations, really critical areas for where the industry is heading. She even received the Nari Shakti Puraskar Award.
Wow. So serious firepower in terms of experience and forward-looking expertise being added or retained at the board level.
Exactly. It signals strategic intent.
What about corporate structure stuff? I think I saw something about an amalgamation moving forward.
Yes, that's right. The board approved allotting shares to shareholders of Minda Aluminum, and a couple of related companies.
Okay.
This is basically follow through on a scheme of amalgamation that was approved by the National Company Law Tribunal earlier. So it shows they're continuing to integrate past mergers, streamline things.
Got it. Cleaning up the structure. Makes sense. Okay, let's pivot to the operational side now. How did the individual business segments actually perform? And what were the key developments within them?
Okay, yeah, let's break it down by segment. Gives a clearer picture.
Perfect.
So first up, switches. This is a big one for them. About 25% of overall revenues came in at Rs's 11,111 crore.
And growth.
Solid.
Right.
16% year-on-year growth. A real highlight here was strong export performance, especially in two-wheeler switches. Q1 exports hit Rs's 68 crore, just in that category.
Nice. Building on that export theme.
Exactly. And they also snagged a new export order from a UK motorcycle manufacturer for their Thailand plant. Shows growing international reach.
Good win. Anything else on switches?
Well, they mentioned the relocation and expansion of their four-wheeler switch operations to Ferknagar is progressing, although they noted it will involve a temporary overlap of costs as they transition.
Okay, short-term pain for long-term gain, potentially. Next,
lighting. Another major segment, about 23% of revenue, Rs 1,013 crore, grew by 13% year-on-year.
what's driving growth in lighting? LEDs.
Yeah, largely. The ongoing shift to LED technology, plus increasing demand for more advanced lighting, fancy front and rear applications.
Adaptive headlights, sequential indicators, that sort of thing.
Precisely. And a cool development, their European lighting operations secured an order for next-gen dynamic logo projectors from a leading luxury OEM.
Dynamic logo projectors. Sounds fancy. Premium stuff.
Definitely signals a move up market, leveraging their tech.
Okay, switches, lighting, what else?
Castings. This brought in Rs 824 crore, about 19% of revenue. Growth here was really driven by new capacity coming online.
Investments paying off.
Seems so. They commissioned a new 30,000 wheels per month line for four-wheeler alloy reels at Bawal.
Okay.
And added another 2 million units per year capacity for two-wheeler alloy wheels at Supa.
Big capacity additions.
Yeah, and there's more coming. Phase 1 of their big new Karkota four-wheeler alloy facility, that's expected to start up in Q2, so very soon. That adds another 60,000 units per month capacity.
They're really scaling up in alloy wheels then. Betting on demand.
Clearly. Okay, next, seating. Smaller segment, 7% of revenue, Rs 320 crore. But strong growth here too, 18% year-on-year.
What drove that?
Primarily diversification, getting more two-wheeler customers, and also supplying suspended seats, likely for commercial vehicles or tractors, to the domestic market.
Okay, broadening their base. Makes sense.
Then there's acoustics, horns, basically, Rs 187 crore, 4% of the top line. This segment actually saw a bit of a dip.
Oh, why is that?
Couple of reasons mentioned. Muted demand in the European auto market hit them, and also a trend shift from dual horns back to single horns in some vehicles.
Market trends. So how are they responding?
They said they're actively working on improving efficiency, cutting costs to, get profitability back up in that segment. Agile response.
Okay. And that leaves the other segment. You mentioned that earlier.
Yes, the other segment. And this one was a real standout. Generated Rs 966 crore in revenue. That's a huge 30% year-on-year increase.
30%? Wow. What's actually in that others bucket?
It contributes 22% to the consolidated revenue now, so it's significant. And it includes important contributions from growth areas like controllers, which brought in Rs 57 crore, and sensors, Rs 5 crore. These point towards the newer tech areas.
Right. That others growth sounds really exciting, especially, with all the talk around EVs and smart car tech. What exactly is Uno Minda doing in that EV and advanced tech space? That feels crucial for their future.
It absolutely is, and electric mobility is clearly a central pillar of their strategy now. They've made several really key moves just this quarter.
Okay, like what?
Well, first, EVSE, that's electric vehicle supply equipment, chargers, basically.
Right, charging stations.
Commercial sales of their home charging solutions have actually started, supplied to dealerships for the aftermarket initially.
Okay, get them out there.
And they expect OEM deliveries, so factory fit or dealership installs for new cars, to begin in the next 3 to 4 months. So they're building out that ecosystem piece.
Important piece of the puzzle. What else?
Sensors and ADS. Advanced driver assistance systems. Their sensors business did exceptionally well, as hinted in the others segment.
Mm-hmm.
And a major highlight here, They commissioned India's first localized camera module production line at their Pune plant.
First localized camera production. That's big. These were fully imported before.
Exactly. These are the cameras for things like parking assist, surround view systems, crucial ADS components.
Yeah, absolutely.
Commercial supplies have already started, and they expect a ramp up. Huge step for localization and high-tech manufacturing in India.
Definitely a milestone.
Yeah.
What about core EV systems, powertrain stuff?
Ah, yes. This was a massive strategic move. Uno Minda completed the acquisition of the remaining 49.9% stake in Uno Minda EV systems.
That was their joint venture with Freewo, the German company.
Correct. So now it's a wholly owned subsidiary. But this wasn't just buying shares.
No.
No, crucially, the deal included acquiring the intellectual property, the R&D teams, and the technical know-how related to e-drive technologies from Freewo's German and Vietnamese operations.
Wow. So they bought the brains and the IP too.
Essentially, yes. It significantly strengthens their in-house capability for EV powertrains, really brings critical tech under their own roof, a major step towards controlling their own EV destiny.
That sounds like a potential game changer for them in the EV component space, taking control.
It's a very decisive move. And there's more on the JV front. They also got in-principle approval to acquire the remaining stake in their JV with Buehler Motor.
Okay, another consolidation move.
Seems like it. Buehler Motor GmbH wants to dilute its stake, so Uno Minda is looking to potentially take full ownership there, too. Discussions are ongoing.
Lots of strategic shuffling to strengthen their core EV capabilities. Are they building new EV facilities too?
They are. Construction has started on a new greenfield facility for high-voltage EV power components. That's under their JV Automotive Phase 1. Commissioning expected by Q2 FY27.
Okay, so a couple of years out.
And they also approved a big CapEx, Rs 210 crore, for a new EV casting products plant. This one's in Chhatrapati Sambhajinagar.
What kind of castings?
Primarily for complex, 2-ton castings needed for four-wheel EV drivetrains, housings, things like that.
So heavy-duty, complex parts specifically for EVs.
Exactly. It shows a clear, capital-intensive commitment to being a major player in the EV supply chain.
Wow. That is a very clear, very decisive push into the EV space.
Mm-hmm.
It really feels like they're positioning themselves for the future of mobility. But doing all this requires significant capability, right, beyond just the products. What about their global footprint, their R&D muscle that makes all this innovation possible?
Good question. It all has to be underpinned by strong fundamentals. Their revenue breakup for Q1 still shows India as dominant, 89%, with international at 11%.
Yeah.
And OEM business is 93%, aftermarket 7%. But that international piece is growing.
Right.
And they have the footprint to support it. 70 plants globally, 29 engineering centers, 14 warehouses. It's a significant network.
70 plants, that's extensive.
It is. And on the R&D side, which is crucial for all this new tech, they have 37 R&D and engineering centers around the world.
37.
Employing over 1,200 engineers just focused on new product development, NPD.
Wow.
And the results, 252 patents already granted, with another 444 filed. They're generating IP.
252 granted patents. That's serious innovation.
And it's supported by a central R&D center here in India, plus a global center for embedded and software technology with sites in Germany and Spain. So a real commitment to deep in-house R&D and localization where possible.
Okay, that paints a picture of a company really investing heavily in its future capabilities. Which brings us back to the finances, in a way. How do they manage the financial side of all this expansion? And, beyond profits and products, what's their commitment to broader corporate responsibilities, ESG type things?
Right. So managing the finances, their net debt did increase slightly. As of June 30th, it stood at Rs 2,028 crore.
Okay, up a bit. Why?
Mainly due to that expansion capex we talked about, including Rs 130 crore just for acquiring the land for that new EV casting plant in Chhatrapati Sambhajinagar. Strategic spending.
Got it. But how does that sit against their equity, the ratio?
Still very healthy. Their net debt to equity ratio is only 0.34.
0.34. Still very comfortable.
Absolutely. Indicates prudent financial management, plenty of capacity for more investment if needed. They currently have something like 13 ongoing expansion projects across key product lines.
13 projects running simultaneously.
Yeah, representing a total planned investment of nearly Rs 3,500 crore.
Wow.
And several of these, like that Phase 1 of the Karkota alloy wheel project, are actually slated for commissioning this financial year. So we'll see the results soon.
Okay, so a clear investment roadmap, well managed financially. What about those broader responsibilities? Environment, social?
Yeah, they seem to take that seriously too. Over 90% of their plants are certified to international standards, like ISO 14001 for environment and ISO 45001 for health and safety.
Good baseline. Any specific goals?
Ambitious ones, actually. They're aiming for 60% renewable energy use by 2030,
60% by 2030. That's significant.
carbon neutrality by 2040, and net carbon zero by 2050. So really long-term environmental commitments.
Impressive targets. And on the social side?
Their social initiatives are mainly run through the Suma Nirmal Minda Foundation. It operates 18 Samarth Jyoti centers, 3 senior secondary schools, and a hospital. Focus seems to be on education, skill development, healthcare.
Giving back to the community?
Seems to be a core part. And internally, they've been certified as a great place to work for 4 years running now.
That says something about their culture.
It does, and their leadership has also picked up awards recently for philanthropy and trusted leadership. So it seems like a focus across the board, from environment to people.
Okay, so wrapping this all up,
Yeah.
what does this deep dive really mean for you, our listener? It really feels like Uno Minda is on a path of, well, pretty aggressive growth and maybe even strategic evolution, right? More than just expansion.
I think that's exactly right. The key takeaways, for me at least, are pretty clear. You've got strong financial performance, obviously, but it's fueled by this really diverse product portfolio combined with very significant, very targeted investments in these emerging tech areas: EVs, ADAS, advanced electronics.
They're not just spreading bets. They're placing focused ones.
Exactly. And those strategic acquisitions, like bringing Fryo's tech in-house, plus their strong R&D base, it's all positioning them as a future-ready solutions provider, not just a component maker.
Right. A solutions provider. That's a key shift.
And it seems to be allowing them to consistently outperform the wider industry average and really lead the charge in certain areas of automotive innovation.
It definitely feels like they're betting big on the future of mobility, building that foundation brick by brick, or maybe acquisition by acquisition.
A combination of both, looks like.
Which leaves us and you, the listener, with a really interesting question to ponder.
Given these aggressive investments by Uno Minda in EV components, in ADAS tech, and this clear drive for localization for owning their own IP, how might this whole strategic shift fundamentally reshape their competitive advantage, their market share? Could it actually transform them maybe over the next decade from being, a diversified auto component manufacturer into something more specialized, perhaps even a dominant EV solutions provider? What do you think?